Hey guys, Rajib here from Financial Hub India. I'll be discussing a trade today, and through that trade, I'll be showing you what is the real importance of following the lower time frame charts. And if you do not follow the lower time frame or the intraday time frame charts, then you'll be missing out a lot of good trades. Why I'm saying this, because in the market there are either price action traders or any other form of traders. They are like motivating the daily time frame or weekly time frame chart a lot, and it was a time for me too, in my initial stages, in my initial days, that I used to follow the daily time frame charts only, daily, weekly and monthly. And we used to say the lower time frame charts are noisy markets and all, those things. But gradually when I learned price actions from the right resources, and then I came to know basically there is nothing called noise in the market. The noise is in your mind, in your analysis. It's not in the market, it's not in any time frame. If your way of thinking or if your way of seeing the market is noisy enough, or if you don't know how to look at the market, it's like if I give you an example. Do you guys know about the magic eye concept? Just go to Google and type magic eye. You'll be getting a lot of images, all right? And on your first look, you will see those images are too much messy. I mean, there is no way that you understand what the image is all about, But in that image, there is a certain point. And if you just focus on that certain point for a couple of seconds, then only you will be able to see the message of the image, that what the image is all about. And the moment you move your focus from that particular point given in that image, then again it becomes a sea of shapes. That's it. And it becomes messy again. So that kind of focus you'll have to develop when we are going through the charts, and we are really fortunate enough that we know price action trading, and price action analysis is one of the best way to see the real picture of the market. So no matter you are seeing 1 minute time frame, 5 minute time frame, 15-minute time frame, it doesn't matter for you. If you can make money using daily, weekly, monthly, you can make money using 60-minute, 15-minute, 5 minutes. Now, am I talking about intraday trading? Buying today and selling today itself, making money today itself? Not at all, really. It may happen that your trade is executed on the same day and you made profit on the same day. It may happen that you didn't make money on the same day, but you are still in the trade. Alright, so in any way, that's a different topic, the intraday versus the positional. Even in my website, you will see I've written an article where I have shown you that with the same strategy, a simple strategy I have taken, the pin bar strategy, we all know that. Alright, so just using the pin bar strategy, if someone is going for intraday trades, then what is his performance? And someone is going for positional trades or swing trades for 2 to 3 days, you may say, then what is his performance? And you will see a drastic difference. Even though the strategies are same, where the intraday player is buying the same area where the positional trader is buying. Alright. So you can have a look at that, and in future videos I'll create a lesson on this topic particularly. Alright, so here in this stock, if you see the daily time frame chart, so I've just drawn two simple lines here, that is this support level and this resistance level. Overall, if you see, the trend is very much clear, so we are moving in an uptrend, no doubts in there. And to give you more confidence, I'll just show you the weekly time frame chart. Look at this fantastic uptrend. So there is no problem from weekly, and daily in terms of the trend is up. Alright, so now if I'm tracking this stock and I want to buy it and I want to get into this stock on the support level, which is in here, flip support level. So in my strategy, in my techniques, I didn't get anything. Over here, using the daily time frame chart, nothing triggered for me to get into this trade. Because here, definitely after a breakout, I am looking for a pullback, and on the pullback, I am looking for some reversal kind of formations, which is not available here. I don't see it. I don't see any reversal formations here. I just see that there is a mixed bag of candles, black, blue, so sellers, buyers, so that's it. So if I'm just trading using the daily time frame chart, the end of the day time frame charts, then I missed this trade, and I know that, okay, this was a support. From here, price is supposed to go up, and then this is my target, and the same thing is really happening. Price came down here, and from here it's moving up smoothly and heading towards my target. But using the daily time frame chart, I have got nothing in my pocket, even though my analysis played perfectly well. Isn't that true? So how I do is that I go down to the lower time frame chart. Once I do the analysis in the daily and weekly and I draw my lines, then I dive down to the lower time frame chart. So here I'll be going down to 60-minute time frame. This is my 60-minute time frame chart here. In 60-minute time frame, let me tell you about the lines I have drawn. The red lines you see, those are the daily lines. Alright, and the green lines you see, those are the 60-minute time frame lines. So this is a 60-minute time frame key level line, key level resistance I have marked here. Alright, and this was the support levels I have marked here. So overall we can see this channel very much clearly here. So now, this is what price did on the support area. Now on the support area we found nothing basically. Yeah, someone can say there is a pin bar here, but this pin bar will not be considered here as a reversal formations because of certain things, and it's again a detailed discussion covered in the course itself. Just two things I'll be telling you why we should not go with this pin bar here. One is your support level is right here and the pin bar formed right over here. So we are way below the support level here. That is one thing. Secondly, if you go with this one, your stop loss won't match. Now the people who keeps their stop loss right below the pin bar, for them it may match, but that's not the right way to trade the pin bars basically. Keeping a stop loss below the pin bars low. Alright, and why so? Again, it's a detailed discussion in the course itself. So we cover it in the course, and in future I'll try to create a videos on that, on those logics behind that. So coming back to the trade, once we miss this trade right from here, now we have this channel over here, right? So this becomes a key level in 60-minute time frames, which is not seen in daily time frames clearly. Alright. Now if I assume that in daily time frame we can see that level clearly, so what? Does it give you a trade here? Let's say we draw a line here. What happened? A candle formed, then the next candle is forming, that's it. How will you trade this one? And for the people who just buy above the key level, like this is a resistance and the resistance is broken and you are going to buy it right after a break of this key level, for them I must say that that's the most wrong way to trade the price action. You just can't buy a break of a key level or sell a break of a key level here. Or in the other way, if I say you can't just buy a break of a key resistance and a break of a key support level and you just enter it. I have seen so many traders doing that. I would say no price action traders should do that. And the people who used to do this kind of trading, they know how they are suffering. Their only frustration is the moment I enter the trade, it turns down and I lose it. So it's like they're being frustrated. They say, market is against me always. The moment I enter and it goes against me. And the problem is they're not realizing the mistakes they're doing over there. And if you keep on doing so, this thing will happen. This is support level and a break of support. If you're going to sell it, then this bounce back will happen because you don't understand, because you're not trying to understanding the overall price action context over here, the support context over here, the price action strength context over here. You're ignoring everything else and you're just keeping your eye on the support level and waiting for a break, and that's it. And that's how market doesn't work. There are people who just keep an eye on the pin bar. The moment they see pin bar on a support buy, pin bar on a resistance sell, that's it. And honestly, let me tell you this thing, that's how market doesn't work. Market is not about that one single pin bar candle, or market is not about this one single resistance line, that's it. No. All those pin bars or key levels will have to be in line with your overall price action context, then only it will play out. Otherwise you don't. So coming back to the trade, how you would have traded this one. Do you see how the market approached this key level here? Yeah. This was already been a key level, and on this key level, right on this key level, there is a structure happening, and that is these triangle formations. Now what is the power of these triangle formations? Let me create one more videos on these triangle formations only, because the way a breakout structure like this triangle formation forms are being shown in the YouTube or the Google, those are really surprising, and we don't trade it that way. I think on the last session, and I think I already talked about that, whatever for candle formations or chart patterns you go through or you look for, you try to understand the logic behind it. Until the time you are not getting the logic behind it and you are just going with the shape of the formations, you won't be able to make money in long run. Alright, because that's not price action trading. So in the triangle formations, basically what happens is you will have the same layer of resistance towards upside, and then you will have multiple higher lows here. And then again, we don't buy it just above this level. Yeah, there are some conditions. Depending on how this triangle is forming, we decide to buy it directly above this level of resistance. But in most of the scenarios, we try to see some kind of breakout structure over here. We have some particular kind of breakout structure happening right over here, and if those things are happening, then only we go ahead with this trade. So the first thing we see is that on a key level, whether we are able to see a triangle formations or no. Now, without going in depth of this triangle formations analysis of the logic behind it, let me tell you a simple analogy behind it is that we are making what? We are making higher lows. So what does that mean? In a triangle formations, when you keep on making higher lows, that means the buyers are getting more and more powerful, and sellers are squeezing out of the market with times, isn't it? Price goes up, sellers try to make it fall. Again, price pushes up, it stops on the key resistance where the sellers are attacking the market, and the attack goes on and the sell-off starts, but this time it falls lesser than the last time. So who wins? The buyers. Again it goes up, again the sellers attacks back, falls back, again it falls lesser than the previous time. Who wins again? Buyers. Who is going out of the market? Sellers. So this overall pattern communicates with you is that the sellers are being squeezed and kicked out of the market with times here. Alright, and the buyers are gaining the controls over and over here. So that is the first thing to watch for. Second thing, there are different ways these formations will take place in the market. It won't always be the same way you are seeing here, or I have drawn here. Since we understand the logic behind this concept, so no matter what kind of formations it comes with, what kind of shape it comes with, if the price action communicates with the same informations, whatever I've shared with you now, then it's a powerful breakout structure for us, because on the key level, we already have a key level here, and on the key level, when we see these kind of formations, in that case, these are fantastic communications from the price action data for us as a trader to look for or to hunt for a breakout trade in here. Alright, so this triangle breakout structure is one of the key strategies we follow in Financial Hub India, and it has a very high accuracy in our overall trading strategies. Alright, so what I did is that on the 60-minute time frame key level, when we found our, this breakout structure, then again from 60-minute time frames, we dived down to a 15-minute time frame, and in 15-minute time frame, we captured this trade over here, and then generally we trail our stop loss based on the swings. And that's what we have been doing over here. And so our first target is hit here, and we have an ultimate target. The overall target is from daily resistance really. So we are sitting for this level here. And the same kind of trade we talked about a few days back in India Cement stock, if you guys remember. I'll just drop the link in the description, the video link. You can go ahead with that. So just a quick thing to finish up the lesson here. That is, when we go for a trade in the daily time frames, this was our target basically, our ultimate target we say. And in between, in the lower time frames, we have the other targets. Like in 60-minute time frames, we had this key level, so we had this as our target. So what we do is that once we enter in here, then price reaches here, then we see the price action happening here. We don't exit. We see the price action happening here, and till the time we don't see reversal formations happening here, we don't exit really. And in the meantime, we are obviously trailing our stop losses based on much lower time frames, which is 5 minutes or 15-minute time frames here. And as you see here, we don't see really any reversal formations as such, isn't it? Even though there was a pause here, and which is expected. I mean, after a rally from here to here, there will be some profit booking. Again, we need to understand the swing structures. So coming back to the trade, you can see the price is really going smoothly, so we don't need to worry about it. Alright? So you don't need to worry about exiting the trade right over here. Now we can target directly this level, and since price is really trading well above this level of key resistance, so why not going for a pullback up to this level and get into this trade again as an accumulation process to add up some more positions. So here a quick thing for my people in Financial Hub India. Guys, as you know, we have a trend momentum strategy, right? So in that trend momentum strategy, we can see the build-up is already happened over here. The trend is in good momentum with the swings. So we are already above this key level of resistance. So we can go ahead with the trend momentum strategy over here also. Alright, and if you see, we have already triggered it. So I want to see some charts from my Financial Hub India students that how the trend momentum strategy triggered here. Just let me know with some explanations how it happened here and how you analyze this part. And then this is a homework for you, that how I'm really saying that this is qualified for a trend momentum strategy trade here. Just let me know that. Okay, so I think I'm taking much time. Just the last thing is that I just want to show you the INDIACEM trade I just talked about, and the video link is given in the description. So this was INDIACEM trade here. We have been moving in a flat market condition and we were on a support area here. This was a resistance area here, and we have been tracking this one right over here. So even though we don't have a triangle formations to go ahead with the trade, but there was a key level breakout structure here. In 60-minute time frames, this is much clear, isn't it? So we have been tracking this part, and we have been expecting a move above this level or below this level. So using our another mode of breakout structure, we were able to catch the momentum over here. And the entry is updated in the Telegram channel for my Financial Hub India guys. So this was our first target. This was our first target. This was our second target. This was our ultimate target coming from the daily time frames. And as we discussed earlier, if you don't see any kind of reversal formations on the target 1 or target 2, then you don't need to exit. And some kind of reversal formations is seen over here. Again, the explanations is also given in the Telegram channel, right? So instead of waiting for this ultimate target, we really exited our whole quantities over here. So that's it from today's discussion, and I'll see you guys on the next lesson, hopefully. All right. Till then, take care. Thank you.